So say hello to Patrick Littler, Vice President of Retail Strategy and Analytics of DriveTime, Antonio Domenzine, Director of Marketing Analytics of DriveTime, and Frank Lucier, Senior Vice President of Customer Success for Ispot. Welcome, gentlemen.
Thanks. All right. Well, thanks everybody for joining us. Let's get going. As mentioned, my name is Frank Lucier. I'm the SVP of Customer Success at Ispot TV. And I'm here to moderate the session about how DriveTime is optimizing frequency and conversions to boost ROAS. Joining me today are Patrick and Antonio from DriveTime, all the way from Arizona. I had a terrible dad joke about tread on their tire they lost on the way out here from Arizona, but we'll leave that one be for now. So DriveTime first started working with Ispot in 2019 to improve linear TV attribution, and about a year later to start testing OTT, which over the past 2 years has allowed the brand to better justify and optimize their TV and streaming investments. So guys, let's get started. Patrick, Antonio, can you tell us a bit about your role and the TV advertising strategy at DriveTime?
For sure. Yeah, specific to marketing, my role is really making sure our company is investing and pouring money into marketing, both from media, from talent, from data, into partnerships, because it really is our growth engine for our company.
I'm the Director of Marketing Analytics within Patrick's team, and our primary focus for now is optimizing our TV buy.
Fantastic. Well, I'm interested in your current approach to TV buying and measurement and how that's evolved over time. Could you walk us through what your strategy looked like in the past, maybe what it looks like today, and what you expect it to look like in the future?
Definitely.
Yeah.
So we kind of had two phases. The first was really starting from the ground up. We had to identify a good media partner to take us on this journey of optimization. So Horizon Media out of New York was the company that we partnered with. Shared our values, really wanted to come on, teach us, and learn with us on this journey. So that was the first step. And then coming up with the game plan. So at that point, we were just trying to learn, get every piece of information possible. Horizon was a great partner in that. So all the Nielsen data, Kantar, PAL, every single index. And then we'd marry that with some of our internal data, customer surveys, business objectives, and then some statistical models. And essentially, we're just stitching all this information together to try to make the best decision possible. And then increment our way towards growth. So we'd look at all this information, put it all together, try to balance it all, and then start making decisions and get incremental growth, monitor business results. So it was really effective, but it kind of only took us so far, right? We didn't truly know what each impression was giving us. And that kind of leads us to our second phase. And that was really the partnership with Ispot that became our foundation for attribution and measurement, and allowed us to kind of take our buy to the very next level. And really what it was that kind of one-to-one attribution of an impression to then a device seeing that impression, and that network of devices, what they were doing on our website and converting or not converting. So that was very powerful. And then not only that, that kind of one-to-many, multiple impressions to that one device and the action to start to understand the dynamic of every single impression and what value that was giving us on an incremental basis. And kind of was now the foundation to that next level in 2019, 2020, 2021, where we really started leaning into that heavy. So, and I'll just kind of wrap quickly with some business results. A lot of charts here, but the story is we had a 90% increase in leads over the past 5 years, which is massive growth, with only a 34% increase in spend. And if you adjust for CPM inflation, that's probably more like a flat spend level. So how do we achieve that growth? The high-level strategy is really reach over frequency. Get as much reach as possible, and not really focus on frequency was our strategies there. And how we went about that, we started with about 10 networks that we were advertising on national cable and grew that up to 50. We also took our ad creative and implemented 15-second ads from 0% up to over 50% to maximize our dollars and that reach. And then streaming was a huge piece of that. So we kind of went all in right around the pandemic and grew our spend exponentially and found as many streaming partners as possible and tested them and continued to lean into that. So a lot more detail went into that strategy, but at a very high level, that's where we're at today.
That's fascinating, and it appreciate where we're going next with Antonio to get a little bit more into the details. So the topic of the session today is optimizing frequency and conversions. Can you walk us through your methodology behind this optimization? What tools are you and the team using? And then how are you able to improve your ROAS based on these calculations?
Yeah, let me start by just commenting on our attribution model or attribution approach. This is a key ingredient in our optimization story with TV. And there's not necessarily anything novel at the concept of attribution. In a sense, what we're trying to do is break out our all the components of our media buy and attaching a figure of a top of funnel response metric that each component is driving, and then assigning a cost element to that. You can understand where your areas of efficiencies are and where your opportunities are. What we're doing different is we are incorporating a concept of saturation and incremental lift in a way that we truly get to understand the underlying dynamics by which media is driving response, and also lets us put a very cohesive grip or a very cohesive narrative around our marketing performance. So one of our primary KPIs is precisely that: how much of an incremental traffic we're driving to our website for every dollar spent. That's our CPIV metric, and it's a KPI that we've already accepted as an organization. So let's dig into this a little bit, and starting with the basics. This is a graphic illustration of the impression and response data that Ispot collects. We have our impressions shown in the dark shades, response on the green shades, and the DR perspective is anything within a 24-hour or a 48-hour window after an impression. Any conversion event gets tagged as a response, and you can you put together a certain set of conversion metrics from a per impression basis. And it's a great way to get started on TV optimization. Now we have access to the underlying data, so we get to play around with this data and shift our perspective a bit. So rather than looking at conversions in terms of a window after an impression, let's just take an entire media week and group our screens based on the number of impressions they displayed over the course of that media week, and then calculate the response rate for each of those groups, not worrying about whether an impression occurred before a conversion. We're going to let that one slip for now. And this is what we get. What you see in the bars is the number of TVs in each frequency bucket, and then the diamonds show the actual data, the conversion rates associated with each frequency bucket. A couple of things to point out. The first one is that we have a data point for the unexposed population. That's our zero frequency bucket. And it's a fundamental component in our attribution approach. Why? Because our assumption is, and you're more than welcome to challenge this as we've done so internally, but our assumption for now is that this is the behavior that we would have observed on the remaining populations, those that did get media exposure, if they hadn't gotten the exposure. So what that means is that if we want to calculate what our media-driven response is, we need to subtract that baseline rate. And that's what truly we're getting from our media buy. This should be also a, I think the fact that we are seeing this upward trend should be a confirmation that media does work. I think that should come, not surprising, but it is obviously good news. And the second thing to point out is that we have a logarithmic pattern. So for every response rate does increase as frequency increases as well. Although the jump from the jump in response rate as you move up in frequency is lower each time. So you get diminishing returns on the first impression. So that is the most valuable by far. First impression is the most valuable, and that's one of the key takeaways on our first preliminary insights. Now you can also put you can use this data or these mathematical components to calculate the value of an impression. So if you know what the value of a response is and multiply that times that incremental rate, that's the value of each impression as you're moving up in frequency. And when the value of an impression becomes lower than what you're paying for media, then you've crossed into negative ROI negative territory, and that would be your cutting point. That would be somehow easy to implement if you're running an OTT campaign, because you can run frequency caps. Caveat, there might backfire on clearance, so don't get caught off guard there. But that would work from an OTT perspective. From a linear perspective, you can't just say frequency 5 for everybody and call it a day. And interestingly, linear is still where we get most of our reach. So an initial directive from this analysis was that, generally speaking, trading frequency for reach was a favorable move, was a positive trade-off. And I say generally speaking because there are instances where response rate does vary by audiences. Some networks have higher response rates than others. We're not showcasing that here for just the purpose of simplicity, but in some cases, having higher frequency for high response audiences may pay off better than that increasing reach in lower response audiences. That's just something to watch out for. And another thing that I want to call out is that I don't think I'm going out on a limb in saying that this behavior applies to all industries and all media. I've done enough research to see this pattern repeated over and over. I may not have the proof to this generalization, but I would be very surprised if this is not the case in other industries. So what would our framework to calculate incrementality be, and then derive from that, how would we optimize our linear buy? Let's just start with the basics again and take the baseline in our incremental response driven from the fitted curve derived from the data. So every week we recalculate our curve. That becomes our measurement stick for the week. And if you take that differential between the baseline and the response rate that you're shown in the curve, that would be your expected incremental response for each of these buckets, and times the number of TB counts, you'd get your total incremental response. You sum across, and that would be your number. Now, this is only for the Ispot population, so you want to multiply by a factor to extrapolate to the entire US. And that's a great metric to tell us what our total contribution of our entire media plan is. We're not getting there. We're not getting to a point where we can optimize media by specific allocations or by each component. So let me get there. And this may be more applicable to our particular buy in DriveTime because of how diversified we are in media in our buy. And we come to a point where there's a good amount of overlap between networks in our buy. There's not necessarily two networks highly overlapping with each other, but as we add up the 30 plus networks we're on, if you take them one particular network and compare it to the rest of the buy, each network has some sort of contribution to this overlap, and that's increasing the amount of exposure that a person gets. So if you want to isolate the specific contribution of a given network, then we want to do a dual tabulation where we first account for the number of impressions delivered through other networks, and then the number of impressions delivered in each particular network. And the key to this is to realize just the same assumption that we made in terms of the overall incrementality calculations, where our baseline behavior is at frequency 0. In this case, our baseline behavior would be determined by the number of impressions displayed through other networks. And then based on that, again, it's the same set of logic. We multiply times the number of TB counts, and that gives us our total number. Now, in this case, I'm showing incremental response by network. We are making media decisions at a more granular level. You can take this methodology and apply to even a single airing, and get a very accurate representation of what we're getting out of that single airing. It's not usually the case, but we've bought single airings, and this will be our methodology to analyze and to assess performance for that. So you can go as deep or as broad as you need to. Now, again, we're still not getting to a point on how do we optimize. So if you think of the incremental response you would get by network or by each media allocation, you come to realize that as you're adding spots on a particular allocation, say network day part, you're obviously increasing frequency more so than you're increasing reach. So you would expect your incremental contribution for each additional spot to be diminishing all the way up to the point where it's no longer going to be profitable. We are not there yet. This framework is still under developing, but that's our following step. I want to show our performance, our Q1 performance this year, which is when we finally had this clarity and we started developing this framework. At that point, when we were planning Q1, we didn't have a very detailed outlook of our cost per incremental visit by network day part, which is how we're, for the most part, how we're buying media. So we had a general directive to say, we're going to have to do a trade-off between frequency and reach. So we're going for a higher reach, lower frequency, which we did attain on our linear buy. We increased our reach by 9%, decreased our frequency by 14%. So our tactical approach was correct. Now, did it provide any results? So let's look at how much we spent last year. That was 15%. This year was 15% less than last year. In addition, we have a 6% increase in CPM. So essentially, we are buying 20% less media than last year. And our results, in terms of direct traffic, we have this component in our traffic generation that's been traditionally linked to TV performance. That's not necessarily a pure attribution, but it's been historically used as a gauge. That increased by over 20%. And the incremental visits we calculate through our methodology comparing this year to last year increased 5%. So putting things together, if we get a 5% boost out of a 20% decrease in our how much media we buy, that's over a 25% boost in performance compared to last year. So we proved that we were able to translate our insights into a tactical approach, and then that tactical approach did turn into providing the results that we wanted. Just closing with the high-level talking points, or the takeaway is, again, that first impression is the most valuable, and then from that point on, we get diminishing returns. You're going to get, or we're getting about 40 to up to 60%, depending on seasonality and the specific network. We're getting up to 60% lift in that first impression. So again, given the portability of this pattern to other media channels and industries, this is a big takeaway for the audience.
Well, Antonio, thanks for sharing the methodology and the details behind it for the group's benefit here. And I mean, certainly the results that you showed speak for themselves. So great work. So Patrick, back to you. Can you share any other examples of how you've been able to optimize TV ads using the data and analytics that you have today?
Yeah, I don't know if I have any examples of how we've already done it, but talking about what we plan to do, there's two major components that we need to add to this model that Antonio was talking about. The first one is ad creative. This doesn't have a concept of creative. So how do you optimize with both incremental conversion, the response rate, but then also creative on top of that? So there's some relationship, right? If you hit them with that first frequency, and then you hit them with a second, if you overlay a different creative, you might get a different response rate. So we need to understand that a little bit better and have those things complement each other. And then the second biggest piece, which has been a topic here all this week, is that cross-platform. So that is all in the linear world. He's done a great analysis to understand how to optimize linear, but there's other platforms, right? OTT being the biggest for us. We don't have that cross. We have that within network, but not that cross attribution within platform. So we don't have that solved yet, but with great partners like Ispot, we're asking them for things every day and trying to come together and figure out how to solve that problem, which I think all advertisers here are dealing with.
Sure.
But great to have a partner in Ispot that's charging down that with us.
Well, that's great. Always something more to do. That's for sure.
Yeah.
All right. Last question here, then we'll get to some Q&A. I think it'd be really helpful for today's audience to understand kind of what's your advice for marketers that are trying to set higher standards for their organization to become more data-driven?
Definitely. I think we said it a bunch of times today, but incremental. I can't stress that enough. It's great to have an acceptable or a promising average return on ad spend, ROAS, but you really need to look at it incremental because you're not optimized until you're looking at incremental. So there could be opportunity, even though you have a great average ROAS, there could be opportunity to invest more into that and get more incremental conversions at an acceptable incremental spend. Our kind of viewpoint is if you can get that incremental cost per conversion to meet your incremental profitability, that's really where we've optimized marketing from that channel. So that's the foundation of not just linear, hopefully OTT, paid search. That's really our thought process on how we optimize marketing in general. And then, the second bullet is always be curious, keep pushing yourself. The job's never done. Antonio's done amazing things unlocking this data, but he's got a ton more to figure out. And after he does that, there's going to be another challenge, right? Especially as media evolves. And then our last kind of mantra is always make sure all the things we're doing are making it to the bottom line and having real business results. Because if that's not happening and we think we're doing something great on marketing, but it's not leading to great business results, we've missed something either in data or our models or something's off, and you need to go back and kind of run through the first two loops. So those would be our key takeaways.
Fantastic. All right, just on the last slide we have here, there's a link for the group's benefit here. Antonio's been kind to share the work behind the work here. So this links to a spreadsheet that gives you the map to the data that he shared and the conversions he shared earlier in the presentation. Okay, so we'll pause there now. We've got a few minutes for Q&A, so we'll open up to the room or the audience streaming as well. If there's any questions, happy to answer them. Don't be bashful. We'll start talking about the NFL up here if we don't have any questions.
We got one right here.
Quick question on if you guys took into account the pandemic and viewing patterns and response patterns versus how we're kind of opening up to the away from COVID and moving forward.
Go for it.
That's a great question. Yes. So when we're recalibrating our media curves, the response curves, all of that's reflected in that response. So we're using the response more of a measurement stick for previous media that we've run, not in terms of looking forward. There are a set of components we can't or maybe hard to anticipate like potentially higher conversion rates because there's IRS incentives or tailwinds or headwinds. Some of them you can identify, some of them don't. So we have to make our best guess into how response is going to look in the future if we want to get an accurate assessment of what our performance will be. But when it comes to past behavior, all of that's being reflected in the curves, and we do see a very clear difference on the response rates we were observing. Again, normalizing for frequency, the response rates we were observing last year versus those we're observing this year.
Thank you. Hi, thank you for your insights. And I just would love to know what are some key characteristics that you look for when you evaluate technology to for a sustainable media future?
Yeah, I think like Ispot is a perfect example, right? That's forward-looking, that's trying to solve a problem and anticipating the future, and then wants to be a partner, like a true business partner that they're not just selling you something; they're trying to work with you to solve your problems. So I'd say from a company, someone that's kind of forward-looking from that aspect. I don't know if you have anything to add.
Data.
Yeah.
That will be my primary focus and ability to connect that data to performance.
Great.
Some virtual.
We have a virtual question from Bart. What are your plans to work with all the large media buying agencies and their backbone ED ad tech and commercialize these techniques so they become seamless and integrated into any national and local video deals so that media buyers are not bending over backwards to steward those deals, especially providing these KPIs that Antonio is speaking into the buyer's schedules they are maintaining. Would love to hear more about the RNF model too. All right, I think we have like a couple more minutes left. That was
question from an agency, I think.
We ran out of time. Sorry about it.
Why don't you talk about the back and forth we've had with our agency?
All right.
I think Horizon's online.
Yeah, I know, right?
Yeah.
You guys are putting us on the spot. Yeah, Horizon's their media agency, and they've done an amazing work in helping us implement all of our findings. And there's been a lot of back and forth. In my particular experience, I don't have that media buying background. My work has been primarily on the analytics side. So there's a lot to it that I don't know on the tactical side. So we have that back and forth, and we try to be very, very conscious of not overburdening our agency, asking for at least what we think is reasonable. And it's it's a great relationship we have with them. And it's just we're following an evolution process. I think both parts are doing a good amount of work in trying to implement the best we can, and there's still a lot of things that we need to figure out on the tactical approach.
Yeah, just build on that. Antonio wants to change the schedules every day, right? And in the traditional linear, that's just
not anymore. Not anymore.
Yeah, not anymore. But he wanted to, but that's just not reality, right? Because of the limitations of that. But certainly, as it evolves and all the topics today of programmatic, hopefully one day that is true, and he can bid every hour, every day on impressions and get his dream of that.
Great.
Guys, terrific job. Frank, Patrick, Antonio, thank you so much for your contribution. Thank you very much.
Excellent. Appreciate it.